So we just got another interest rate increase. Will this finally crash the real estate market?
Let's find out. And we are back with another market update for the month of April, looking at the most recent data from OneKey MLS for residential, condos, and co-ops. There was a total of 5,030 listings on the market. There was 1995 new listings on the market, which was about 8% decrease from the same time last year. There was 1370 new contracts pending, which was about 15% increase from the same time last year. And there was 956 closings on the market, which was about a 9% increase from the same time last year.
So on average, these homes, they were on the market for 67 days before close. For single family and multifamily, the average list price was $1,030,000. That's almost 12% increase from just a year ago. The average sold price was $960,000. That's over 15% increase from a year ago. So for condos and co-ops, the average list price was $379,000, 2% increase from a year ago. The average sold price for condos and co-ops was $350,000, almost 5% increase from a year ago. What do you see in the market right now, Josh? I mean, do you see some of the buyers sort of giving up because they just can't afford?
I see a combination of both. I see some buyers, slow down. They can't really afford what they could have afforded, 2 months ago, 3 months ago. Now the monthly payment is much higher with the interest rates. And, I also see buyers that are still in the market strong looking for something. So, it really depends on your personal finances, and your lifestyle. So if you need an upgrade, need a downgrade, need to move for a certain location, for work, whatever it might be, you're still going to buy. But for the regular buyer that's living here, that's paying lower rent, that's not getting an increase on job salary, it's going to be a lot tougher. And
the Fed, they met on May 4th, right? And they increased the rate 0.5% again. So, and they're meeting 8 times a year. Every meeting they're going to meet, most likely they're going to be increasing the rates. So definitely, I think affordability, it's super important. And yes, there are some buyers in the market today or a month ago, which they already were like on top of their budget, right, to buy it. So with the rate increase now, they can afford the pricing. Again, just to give you a perspective, if you keep the payment the same on the $850,000 purchase with 20% down with 3.35%, now the same buyer, right, the buyer needed to make about $87,000 to qualify for that type of loan, right? Now the same buyer with the same income with 5.5%, he qualifies only for $660,000 with 20% down. That's almost $200,000 less than he would qualify before. So will this really have an effect on the real estate prices? Only the time will really tell us. The real estate prices, last month in April increased over 15% year over year. Are we going to see that trend coming? Like you said, right, there's a big percentage of people which they still could afford to buy a place. So I don't think that's going to have an effect on the prices. But maybe in some neighborhoods, if the homes are not selling because the buyers can afford it, it's only logical the price is going to have to adjust. The Fed really is trying to fight and slow down the inflation, and the inflation last month was 8.5%. That is the highest since 1981.
It's crazy.
And because inflation increased, prices of everything, gas, electric, goods, also real estate, one way to sort of combat the inflation is by increasing the rates. The treasury bond is up. The treasury bond and the interest rate, they sort of flow together, right? So if the treasury bond goes up, the interest rate goes up as well. Because keep in mind, when you're getting a mortgage from a bank, ABC Bank, right? The ABC Bank now is going to sell that loan to an outside investor, right? And at super low rates, just the mortgages, they're not enticing to invest into the mortgages, right? They're not really buying it anymore. So by increasing the treasury bond, now the investors like, oh, maybe we can put our money in the treasury bond, right? So for the interest rate for the mortgages now to be also enticing for the investors, they have to increase the interest rates on those as well, right? So we can get liquidity into the market, which is actually not a bad thing, right? Liquidity, I think, in the market is super important. So we do expect a slowdown in the real estate market, in New York real estate market, and I think national as well. How big of a slowdown it's going to be, I think only time is going to tell. I mean, Josh, we talk about the shortage of inventory. Supply and demand, right? That's what drives the price up and down. That was really the biggest driving factor of the home prices, and still is. We work with a lot of sellers as well, and they kind of on the fence to sell. How do you assist people in that situation?
We assist them in helping them find a place. So let's just say we list their home, right? Put it on the market, hold a few open houses, have somebody submit an offer, and get under contract. As that's going on, we're also helping them look for a place at the same time. So, we're researching every day. With the interest rates, we get it. They're going to have a somewhat higher payment, but you can always refinance when interest rates come back down.
It's important to know the budget and know what you can get right at that time.
Yeah, know finances first.
Yeah, like that's super important. But more important than the finances is really the reasons. Why would you even want to get a different place? Are you getting a bigger place, right? You need more space for you and the family. And even though it might be more expensive right now in the moment, but again in the long run, it's going to be way cheaper for you, right, to get that bigger place. And not only financially. Right, if you have kids coming, right, and you just need that space, you need that parking. You've been circling around every night looking 45 minutes for a parking spot and can't find it. Like, you do deserve to have a better quality of life at the same time, as long as it is within your budget and that's something affordable.
That why is important.
There's a saying, right? Where there's a will, there's a way.
Mm-hmm.
I think if you truly committed, to making the move, whether it is buying or selling, you will find a way. In any market, right? There's a lot of buyers that sort of on the fence. You have to look at where you are right now. You're either renting or you're owning. It's one of those two. Or maybe if you're lucky, maybe living with your parents. But is that really a long-term solution? Probably not, right? So if you're renting and you're paying $4,000 a month, let's just say, and you could own a place now, maybe for $43,000, $45,000, are you better off really owning the place, right? Because we know the interest rates, they're gonna go up. So that monthly payment, it's only going to increase. If you don't pull the trigger now, when will you really get in the game and own a place?
Buying a home, you have many tax benefits that come with it, which is great. You make money back at the end of the year. Another thing would be, if interest rates do drop, you can always refinance and lower that interest rate. Either pull the equity out, buy something else.
A lot of the people, especially when it comes to real estate, even though they're buying, a home for them to live, they're always looking at it as there would be a sort of investment. Right, they want to sort of project like, okay, are we making the right financial decision, right? Which is important, don't take me wrong. But at the same time, you're buying a home. You're buying a place, where you're going to live for many years to come, where you're going to raise kids, you're going to create memories, you're going to get different benefits. Focus on what it will mean for you and the family in the long run as well. It's the whole overall finances of people, which they sort of going to have to look at now and say, okay, what are the priorities? Is eating out every day? Is it shopping every weekend? Is it hanging out with your friends? They're going to sort of reassess and see what is the real priority here. We're going to be able to do less temporarily, so we can now afford the more expensive, monthly payment for the housing. Because housing, I think, it's always going to be number 2 necessity right after food. People that have to eat and people that have to live somewhere. For us, what's also important, not only understand and see, okay, are you qualified? Are you pre-approved? Yeah, like, that's important. But where you are when it comes to your finances. Where do you want to go? Where do you see yourself in the next 10 years, right? Because keep in mind the decisions, you are making today, they're going to affect you in the long run, whether you like it or not.
So the first thing is you want to evaluate. You want to evaluate your motivation, why you want to move, right? Why you need to move, for whatever reason it might be, okay? Second thing is your finances, right? So it's very important to evaluate your finances before you start, shopping around for homes. You want to get pre-approved beforehand, because with the pre-approval, right, it's gonna let you know not only what you the amount you qualify for, right? Because you can have a great salary, right? You could be making $100,000 a year, but still not get qualified for a good amount. Because also, that's not the only thing. You have to make sure your credit is good, right? You have to have good credit, and also your DTI. You have to make sure your debt to income ratio is not, super high. Debt is very important. And
maybe there might be something on the credit, right? Which there might be some unpaid bill, which maybe doesn't even belong to you, but it's really affecting your credit, and you can't qualify for financing, right? So.
Exactly. So you don't want to be wasting time going to look at homes that you can't even afford. And another big component is what we're seeing is a lot of bidding wars, right? People are coming at asking price, over asking price on homes. So if you're getting outbidded, you're going to get most likely, thrown out. So you have to evaluate your needs from your wants. You have to stay in your budget and sometimes even lower your budget. So if you're approved for $800, you might want to look for homes that are $740, $750, to get that home off the market, because you might have to go higher than asking price in this market.
And by the way, we also did a video on how to get your offers accepted as well, so it should be below in our channel. So definitely, if you're struggling getting your offers accepted, look up that video on there. Also what I see, Josh, with the pre-approval, it has to be real like current, right?
Yeah.
Because the pre-approval is really good for 3 months, right? The bank gives you the pre-approval, you're good to go. You pre-approve for 3 months. But what we're gonna see now, the bank's gonna be giving pre-approval is gonna be only good to go for 1 month. Because if you've been pre-approved 2 months ago, with 3.5% down or even 4.5% down at 800, now when the rate is 5.5%, guess what? You're not pre-approved for 800 anymore. You're pre-approved maybe for 7, right? So that's a challenge for a lot of buyers. So that's one. Always make sure that your pre-approval is up to date. And one of the things I know what we do, when we submit an offer, we always get the current approval for the exact amount. So not only exact amount if the house, if you're submitting 825, not only at 825, right? Because at the same time, you don't want to show the seller all your cards while you're playing a poker with them, right? Like negotiation is important, but at the same time, you really want to make sure, are you qualifying for 825, right? So that's important. Now also, we do sell a lot of homes in Long Island, and property taxes on the average, right, for single family in Queens are around 5,000-6,000. In Long Island, it's 10,000 to 15,000. That's twice or 3 times more. They actually decrease your buying power, right? Because now the monthly payment it's way bigger because of the property tax, right? So you also have to really make sure that you have the exact amount for the property tax. You'll be surprised how many times the other agents they put the wrong information on the MLS, right? They put the property tax it's 10,000, and in reality the property tax is 15,000. That's a big difference.
All the time. They don't put, Long Island, they put the property taxes, but they don't also put the village taxes.
That's right.
So you think you can afford it for 9,000-10,000, but you find out it's 15,000.
Yeah, you sign the contracts, and they was like, okay, the tax is 15,000. You're like, what? 15,000? It's supposed to be 9.5.
Yeah.
No, there's a village tax, Mr. Jones. Oh, you didn't know about that? Oh, I'm sorry. Yeah, now you can afford the house anymore. Right.
Yeah.
I do predict we're gonna see a lot of the homes actually, falling out of escrow, falling out of contracts for those reasons, right? So when you get pre-approved, right, with let's say 5.5% interest rate, that's not the rate which you're actually gonna get. Surprise, surprise. Yes, that's not the rate which you're gonna get. Usually we would say, oh, it could be a little more, it could be a little less, because the rate fluctuates. However, it usually stays about the same over time, right? Now, in today's market, we know it's not going to be 5.5%. You're going to get more. The rate actually is going to be higher. Why is that? Because the Fed's going to increase the rates again, right? The rate's not going to stop at 5.5. It's going to go even higher, right? So what happens when you get that pre-approval, that's not your rate, right? You have to lock in the rate. When people can lock in the rate, when you submit your loan application, you can lock in the rate. When you get your commitment letter, you can lock in your rate. When the title is clear, you can lock in the rate anytime you want to since the application, right before the closing. Usually we don't suggest, given normal times, we don't suggest to lock in the rate unless, number one, you get your title in, so there's no issues with the house. There's no violations, there's no open permits. The owner is actually the seller who can sell you the place, right? Because if there might be some issues might take a week, some issues might take a month, some issues might take 3 months to resolve, right? When you do lock in the rate, you're looking for a certain period of time, right? You can lock in for 2 weeks, you can lock in for 30 days, you lock in for 90 days. However, the longer the lock is, the higher rate you're gonna get. Right? So the shorter lock is, if you get lock in the rate for 2 weeks, they give you a cheaper rate. If you're locking for longer, they're gonna give you a higher rate, right? That's why people, they don't really want to lock it in for too long, because the rate is gonna be higher. Also, one of the reasons why people don't want to lock in the rate, because if you do lock the rate and you're not able to close by that time, you're gonna have to extend that lock, which is gonna cost you money. And you know what? It's going to cost you a lot of money.
You're going to spend more money.
You're going to spend more money, right? So we usually suggest, wait for the contracts, wait for the title, wait for the commitment letter, right? Make sure the appraiser comes in and value. Once you have all of that stuff, then you lock in the rate, not before. However, in today's market, we are entering, uncharted territories. And again, talk to your banker. But we do suggest to lock in the rate as soon as possible. Rate in January was 3.35%. The rate today, what is it? February, March, April, May. In 4 months, it's at 5.5%. That's more than 2% increase, right? And we in New York State, and of course our process, right? It's longer than out of states for you guys, because if you go to Texas, if you go Florida, if you go different states, they could have closing done in 2 weeks to 30 days, no problems. In New York, on the average, how long we take to close the deals?
About 3 months. Two to 3 months.
2 to 3 months, yeah. From contracts to
from contracts to closing.
Yeah, takes about 2 to 3 months, right? So if you go under contract and you don't like the rate, 2 months later, and the interest rate now increased to 7%, that's another 1.5%. I mean, you'll be in jeopardy. Maybe you're not going to be able to afford a home. And still, even though if you would be able to afford a home, do you really want to pay, $7,000, $8,000, $1,000 extra every month because you didn't lock in the rate?
And that's a wrap, guys. If you guys have any questions, want to know more, please comment below. And also, as always, like and share as well. Thank you, guys.